All right. Hey, guys. Sam here with you on Thursday, July 12th, kind of midday. So I'm trying something different today. I feel like you crypto enthusiasts are you really may be a little too narrow-minded with regards to where to allocate your capital for trading opportunities. So we really try and engage with our members, and we've done some polling recently, and we're finding that remarkably low percentage of you are taking this methodology and applying it to traditional assets. And you're going to do what you're going to do. But I just want to try and make an effort here to encourage you to consider these other asset classes. There is great opportunity here. There's good leverage if you know how to trade it. There is great opportunity. There is plenty of upside, and they trade just as technically, if not more at times, than you're going to find in crypto. I mean, this is, I think there's that a fear maybe that you're because you've not traded it before that, well, you can't trade it, or it's too much trouble, or look, I'm in crypto, I understand crypto, so I'm just going to stay there. Well, look. So we're 6, almost 7 months into the crypto correction. We can certainly call it a bear market at this point. So what do you do, right? Do you just keep banging your head against the wall and say, I hold? Well, listen, I'm a long-term holder. I've got a bag full. I've got projects that I'm infatuated with. You could say it that way, with regards to their fundamental story, and so I'm a long-term holder. But that's a fundamental play. I like the story. I like the potential. Well, there have been plenty of stories and plenty of potential in other assets. So, I just want you to stay open to that possibility that if you're just underwater and just getting buried and watching your equity fall lower and lower and lower every day in crypto, as so many of us are experiencing right now, keep an open mind to maybe some diversification. Here's one thing I can promise you: it's infinitely easier to trade. Long, short, no difference. Very, very easy to trade. So I'm just going to try this little exercise today. So, obviously, you can see the earnings down here. So this is an equity. All right, there's not much question about whether or not we've got a trend here. I mean, look, you use the Vegas wave to give you some idea of that. So I'm going to keep the name hidden if I can pull this off, and I'm switching back and forth between a couple of different windows here to see if I can do this. But the point I'm trying to make here is that the underlying asset does not matter. A chart is a chart. It's fear and greed, fear and greed, fear and greed. All right, that's what causes the movement. Oh, something's going, fear. Oh, greed. Fear, greed, fear, greed. It's the same thing, guys. And as we get into the larger traditional assets, I'd like to think we're past the point where I need to prove these algos are in the market, and that we do have at least one algo that we can track. God knows how many are in there, but we have one, just one that I know of. And let me re-emphasize again. I didn't discover this. This was taught to me, just as I'm trying to teach it to you. So I want you to consider this, that there's a lot of opportunity here, and I think some of you are just stubbornly sticking with crypto. And I'm not saying abandon crypto. I'm saying keep your mind open to diversifying this methodology, because ultimately you're here to make money. So with that said, let's take a look at this now. Here I've got a daily chart here. So if you're looking at a traditional asset, always a good idea to visit the daily here. So we can see this. We're going all the way back from $18 to what are we sitting here at $205. Some money made here. Yeah, all right. So it's a silly question, right? It's a rhetorical question. So this is a beautiful trend. Now, so first question is, well, how would we trade it? How would we deal with it where it is right now? Is there any opportunity, or is this just, the money's been made? Might be able to make that argument, but I'm going to show you that perhaps there's some other things to consider here. But if you're looking at a chart like this, so first question is, okay, well, straight up trend. How do I identify what's going on in here? Well, let's just keep it simple. Let's just start. I'm going to kind of take you through this in the way that I would do it, which is a bit of a reverse engineering. So all I'm doing is I'm quickly looking. If you're trying to get an Elliott count on it, what's important to us are the retracements, because they will define the wave count. So it's a couple of just quickie things, right? So there's an obvious pivot here, prior resistance becoming support. So that's worth wicking off. All right, let's see if we can work backwards. Well, if something happened here, we can see we get some sort of a little, it looks like it's right here. We get something here is significant. If I have that just right, and it looks like I've got some sort of this would be very characteristic of what you'd expect to find in a fourth wave. We're getting a triangle of some sort in here, so that kind of gets my eye, potentially a fourth wave. Well, this of course is the deepest retracement. Looks like percentage-wise, maybe even deeper than this. So obviously this was significant. So I'm looking here, thinking, let's see, I'm trying to do this as I look at two monitors. Okay, so then we got that there. All right, so that was something significant. So I looking at that retracement, I'm gonna just a hunch. That's technical, right? Some algo played ball there. So I'm just gonna go back to the last pivot, see what I get here. Well, that's kind of interesting. So from this pivot to this pivot, I come to the 38 to the tick. So obviously, this was technical. That something significant happened here. Given that I can just start working backwards, right? So I can see that I've got a little three-wave correction here. So just first blush here, just looking. Okay, well that's something technical. I got a nice classic ABC there. We know markets trend in 5s, correct in 3s. It looks like I get another 1, 2, and now we're going to get into that right side here. But just as I sit here now, so okay, so something significant happened there. All right, so let's start working backwards. Well, if I go all the way down here to the low, it looks like I've got to get into a pivot here. So it would appear to me that it looks like I can work backwards here, and I can just start from my low, and looks like I get a nice little 1, 2. Looks like here's my 3, there's my 4, and I come into a 5. All right, so I've got my first 5. I get a significant pivot. Obviously, it was important to the market given this reaction here. And I've got my little, looks like sort of an ugly ABC coming down into it, but it looks very corrective. So if I put now let me put a larger degree on this, and let's see if we can make sense of what that would mean. So if that's a completed 5 wave, well then I've got a 2 setting up here. And this is going to need to, well, let's take this up here, and we'll just leave that for the time being because there's going to be lots of subdivision along the way. So we'll take up an intermediate. Okay, so if that's 1, 2, all right, well then somewhere if this is going, we don't know yet where all these are going to land, right? So if you were just starting from scratch, now I do, right? Because I've already done this work. I'm just sort of taking you through it. So 1, 2, all right. Well, then as I look up here, look at this. Well, that's the deepest retracement. So it looks to me like I've got yet another 1, 2. So first thing I'm going to do is measure it and say, well, is it technical? All right. So from here to here, what do we get? All right, on it. Right, well, is it technical? Well, so we come like 2 ticks from the 618, and we run into this prior resistance, and it's a to the tick, right, to the 618. So it would be hard not to look at that and think 1, 2, right? That would be your first thought. Okay, well, I've got some sort of subdivision here that gets me into a 1 wave and then a 2 wave. And then if I look up ahead here, it looks like I've got, I'm not sure yet. So let's just put these aside yet. Let me bring this degree down here, and we'll sort of work into it because we're not sure where that's going yet. Right? You wouldn't know just yet. So here, all I know that I can do is I can get the 1, 2 there. All right. Well, so if that's my 618, look what happens here. Right to algo target. All right. It keeps going here. They ultimately get third target. All right. But shoot, guys, hang on a second. Oh, I hit the wrong button. Let's see if I can go back. What did I do? I hit. Let's see if I do this. There we go. Got it. Okay. So I got it back. Okay, sorry about that, guys. I accidentally hit the wrong key. All right, so where was I? Okay, there's 1, 2 right to target. So that looks good so far. So as a 1, 2. Well, let's start measuring. Let's see if we can figure out. Let's let the numbers tell us and the probabilities of what we're likely to experience. So if I pull this over here. Okay, well, here's so interestingly, take note of this, right? I got to just show you this, right? So here, if I go from this here, all right, so I've got this pivot here reacting, and then I go right to the 100, right? And then I go right here to the 1272. So you can see we're getting very technical pivots here. So let me pull that off again. All right, so if that's 1, 2, it looks to me like that's likely, as we're getting we get the second algo target to the tick here. Given that I'm expecting this to be a 4, it looks like I can build this here as my 3. And then I can put my 4 in here. So this looks like my 4. Now, as to where we're headed next, this also looks very much like a 4. This kind of, it's some sort of a corrective behavior, but it looks much more like a 4 than as a 2. So let me sort of pull this off here and see, would that make sense? Well, let's think about it. Okay, so that if that's 1, 2, we know this qualifies. We're certainly long enough here, and it looks like I can get my subdivision here to get me to that third. Right, so if I go, let's see, so I'm trying to do this here. So I've got 1, 2, and this looks like we may have to go up higher here. So let's pull this up here. So maybe we got to do it this way. So that looks like a 4. This looks like a 3. So I think what we have to do here, so let me take that up a degree so it makes sense. So let's go, we'll go back to white. We'll go up to micro. All right. So what do we get here? So it sure looks like I've got a 1, 2 yet again here. So this looks like I've got 1, 2, 3, 4. Looks like I go to a 5 here. So let's take that down a degree and see if we can make this fit. Okay, so that looks, so now I get my 1, 2, 3. Here's what I'm looking for the 4. It would look like I get a 5 right here where I'm looking for that 4. So this would complete the 5, right? So from here, so I'd have 1, 2, 3. I'm getting a very skinny, shallow 4 in here, and it's hard to say if I might have an expanded B. So that it looks like I might have A, B, C, and I come down into a double bottom here. So I'm going to play this. Oh, shit. Looks like that's my 3, and I get a little A, B, C down here. So there's my 4, and now I've gone up for some sort of a 5 here. All right, so let's play it. So from the 2, I've got 1, 2 in white, 3, 4, and 5. All right, well, let's check that. Let's see. So we're looking for some sort of a relationship here. So the first thing we're looking for, let's take the length of the 1 and project it from our proposed 4. Well, how are we looking up there? All right, well, here's the 100. That's parity, right? So length of the 1 equal to the length of the 5th, assuming I've got it right here. So we're looking for 100% would be perfect. Now we get a little push beyond it before we start this correction, but it certainly looks like it qualifies. All right, so then I would kind of dig in here and say, so I want to build some confidence in that pivot. Well, I've also got this here, so I've got this 1, 2. Let's check that. So in from my 2 to my 3, what do I get here? Well, I'm right at the 38, right where you'd expect it, right? So that all adding to the idea that I've got a good 4 there. So 3, 4, here's my 5, but here's the last little chop I get. So if I think about what's going on here, then it looks like I get, again, another 5-wave subdivision. So if I open this up, it looks like I've got this here. So if I work from this is my low, right here. So it looks like I get 1, 2, 3, 4, and it looks like I end with a diagonal. So I've got all the subdivision that I'm looking for there. So here's my 1. Let's wick it off so we can check for a diagonal. So there's the 1, right? So we're in the clear here. So let me open that up just a little bit more so you can see it. So there's the 2 here, right? There's my 3. Is it technical, right? So there's my 3. Right? 4 comes to the 50 to the tick. Right? What do we do? First reaction here, there's the algo target. They get second target before we start down. So that everything looking pretty good right there. So it looks to me like I've got a contender here. 1, 2, 1, 2, 3, 4, just what I'm looking for. Up for my 5. This is a little skinny. That's shallow, no doubt about it. That's shallow for this 4 relative to this 2. Yet there's no other way to really count that, and that's characteristic of a 4 as we essentially do an expanded flat, and then we go yet again into a 5, and it looks like I finish with a diagonal in the 5th here. So that would play. So if that's completed, that means that I've got my 3rd in here. Right? Not difficult to make that leap. Let's put that in. We'll put that in white. Okay. So now scrunching that all together. Well, let's put it back together this way. Okay. So 1, 2. Then yet again, 1, 2. Again, 1, 2. That's why you'll often hear me talk about if you're a bull, you want a series of 1, 2s. That's the most bullish thing you can ask for. 1, 2, 1, 2, 1, 2. That's putting you into the third of the third of the third. All right, so 1, 2, right? All this clean, measured, checked. 1, 2, perfect pivot here. 1, 2, again, perfectly technical. Up for my 3, 4, there's my, and I complete here in blue, I'm completing that 5, giving me my 3 in white. Yeah, let me change that just so it's not confusing. Let me go to a green on that. Okay, so there's in green, 3, 4, and then I finish yet again. And from my 4 to my 5, I've got another motive wave. I've got a diagonal to finish the 5. So what do I get? I've got my third. So I've got a 1, 2, 3, A, B, C down for the 4. Sure looks like that's my 4. Doesn't it? All right, so what else can we do to check on this? Where are we ultimately going? Well, we want to check that third relative to the 1, 2. So easily done. So we're going to take our absolute low to our wave 1 high, and I'm going to look at my wave 2. Oh, interesting. So let's pull that across. All right, you think that's a coincidence? The extreme for a wave 3 is 261, the length of the 1 projected from the 2. We hit it to the tick. Okay, now at this point, do you care what asset this is if you're trading it? I'd like to think not. Right? This has been incredibly technical. No question we've got algorithmic activity in here. We can track them the whole way. We've got perfect Elliott-Fib relationships. I mean, you can't ask for better trading than that. You simply will not get it. So if you're looking for something better than that, I can't help you. That's as good as it gets. All right, so I've got real clarity here in 1, 2, 3, 4. Whoa, wait a minute, let's check that 4. So if I'm pulling from my 2 here up to my 3, where am I looking for that 4? Well, somewhere between, right in the spot here, I've got my 23 and my 38. Now, are we to the tick on that? No, but we've got a raging bull market. I'm surprised we blew through the 23.6, but I've got a little pivot in here. So if we dig in there, let's just check that. So if I look here from my 2 to my, well, so what do we get? So we know a B wave can go anywhere from the 50 to the 786. Let me get spot on that little pivot. There we go. So I can get an A. I got a 3 wave into the B right to the golden zone, and then we just scream down and we actually get second target. So in addition to that, I can check for a relationship between the length of the A projected from the B, and look what I get here, nice little confluence zone. So high probability target is the 100%. Second most likely is the 127. Whoops, I was experimenting there with. Let's get that. Give me 1 second, guys. I was trying to use that to block what the name of it was. Okay, so there I've got a little hot box here for my C. So you just can't get any better than that. So there's my 4. Right? So A, B, C, and then looks like what's happening here. So it looks like from that pivot, right? I can certainly get a 1, 2. Is this 3? Is this 3, 4? Maybe. We'll dig into that in a second. Right, but so you kind of get the idea here that this is trading with incredible precision. So you could think of it and say, well, if I don't know much about Elliott Wave, well, can I trade this? Well, you could certainly. You've just got retracements that you can work with. They're all been incredibly technical, so you don't need to know Elliott Wave to pick a pivot here to go to that pivot swing and go, oh, okay. Well, I know we're prone to get a reaction at the 50. That's to the tick. So here's your algo trade, right there, boom, right, boom, boom. Then we get a retrace, right? So So just to keep it going here, I don't want to belabor the point, but it seems like I need to give you guys more evidence here. So if I actually would be the first one here. So we get from this pivot, A, B, C, golden zone. All right, so here it is again. Boom, and we actually get second target. All right, so they get it twice to the tick. Right before we start that ABC, right? So sure, it's helpful to have the Elliott count in here so we know what we're anticipating. So if I zoom back out on this, we know where we're prone to be looking for these retracements, and we know the fib relationships that we're anticipating. So the fact that we go 1, 2 and we get the 2618 to the tick for a 3, yeah, that's helpful. I like to tell you that the Elliott wave is optional, but here's a good example of where it's really useful and it's really helpful to us. So do we have a reasonable target up here? Well, that's something to consider. Additionally, we'd want to be looking for parity, just as we did previously on a lower degree. We'd want to be looking for parity between the length of the 1 here projected from the pivot of the 4. All right, let me see if I've got this little box here. I can't tell if I'm right on it. So let me get rid of that. And let's get this right on that pivot. There it is. All right, so what we've just hit 1. All right, looks like there's more to go. Damn it, come here. Looks like there's more to go here. So, well, that would be the minimum requirement for our 5th. We're now getting through that. So it looks like there may be legs here to go. So we would approach this 5-wave structure just like we would any 5-wave structure. So let me show it to you. So let's dig in from, let's isolate this last bit right here, because that's what we care about, is that what's happening right now. If you're not in this, you didn't trade this, well, that's a shame. But so now you look at it and go, well, man, why are we looking at this now? Well, let's go from, as I said, this is an equity here, as you well know. I'm assuming you still can't see it. What about the short-term trading? Because you may say, well, man, I'm a crypto trader. I'm into day trading, man. I like those 15-minute charts. Okay, all right, let's go to the 15-minute and see what that looks like. So let me see if I can get this over here for you, as I have it here. So give me 1 second to see if I can do this without revealing the asset. Okay, so that should keep you. All right, so here's that last low right here. So this is 150, 148, right? So this 15-minute chart, right, from that pivot low that we called the wave 4. Well, it looks like I can get actually it looks like this would be our 1. So it looks like I can get a 1, A, B, C into my 2. Looks like I get a 3, 4, 5, and then I get my first retracement. Okay, let's check it. Well, all right, so this, oh, sure, yeah, it was good on the daily. Man, I can't trade a daily. I don't have that kind of time. I can't wait around that long. I like that fast action, man. Give me the 15-minute. I want to know what to trade now, today, right now. Well, there's your 15-minute trade. Do you think it's technical? Right? How many times have I shown that here? 1,000? 1,200 times? It's 3 or 4 times in every chart that I show here, at least. All right, so do we have algo participation? All right, that's to the tick, man. To the tick, right? We get through it, and ultimately we get the 3rd target. But here was the first kick that you were looking for. So from that golden zone, that textbook perfect trade. Well, what do we get? We got a 1, 2. Well, so it kind of looks to me like I go 1, 2, and then I go again into 5. So it looks like I've got 1, 2, and I can get my subdivision here. I can get a 1, 2, 3, 4, 5. That all looks pretty good. So even just basic stuff, Let's get this dialed in on that low. So here's the 4. We're right just shy of the 38. Vegas wave, nice little support. Boom, we get it again. Right? Algo target. So then what happens? All right, then we get this. Well, what's causing that? Who knows? It's fear, right? So somebody freaked. All right, so then we got, let's get on there. But was it technical? Was it technical? 2 to the 4, right? We're here. Well, so what do we run into? So we can just look here. We get this nice little cluster of prior resistance kicking in here. You think that was significant? You could have done it this way as well. You could have just taken all this little pocket right here. It looked like there was some cluster resistance, boom, to support. So we get that little pivot sitting right there. So from that 2 to that 3, I get some sort of an A, B, and then scream down for this. But we run into that little shelf here, and we've got the 38, and then we scream right back up. Do we get it again? Boom, all right, a little front run on the target. We retrace. So, all right, so what about where we are now? Well, let's just check it. What about from this pivot here? All right, to this, I got something here. All right, so it looks like we're doing it again. So I've got some sort of a 1, A, B, C into a 2. So it looks like this is not done. So from this pivot low to my 1, then I've got some sort of a 2 coming in. I'm looking for 3 up above. I can get this to, yeah, let's get that. Okay, so something continues to run here. So as I will often say, you trade them till they fail. So swing low, swing high on my 15 minute. No reason not to take that. Right? Sure, it's a little shy, but we get an A, B, C. We come down. It's a little shy of the 50. That's where you'd like to have it. But we scream off of that. So looks like 1, 2, 3. So where would we anticipate the 3? Well, we know the 3 has a tendency to be right next to the 100 if we're going to get a 1618 in that third. So all of this pushes higher. So we've taken this asset from just staring at a chart, now broken it all the way down to the last swing in the 15 minute, and there's been zero break in how technically it's traded. Zero. Right? Still just as good as it was. So 2, 3, 4 looks like it. Well, you say, all right, well, that's all fine and dandy. What about, oh, man, you're the trade devil. You're Mr. Pitchfork. It's in your logo. That's why you are the devil. What about the pitchforks on this? Well, let's just take a look. Let's just, I got to get this right on here. So let's get it right to the tick. So it looks like that might be something there. So it looks like we've got this. So looks like we've got I'm looking at a couple of candidates here. So that with this, so here, interestingly, how we are running up on the upper side. So if I put this on here, so let's go to the 1.5. All right, that looks like that contains it here. So from this 1 to my 2, if I've got it right here. So I check that and I say, okay, well, this seems to be the geometry that's affecting the market. But remember, there's a little bit of, it's a little bit of trial and error with the pitchfork here. So I would also check that too. All right, so if I get that right on, what do we get there? Boom. All right, so you see the gap here. Since we're on a 15-minute, we're going to have gaps as the market opens. All right, so from this gap, we go upper parallel, back to the median line, upper parallel, back to the median line, to the 1.5. Now, this is the scream lower where we get that secondary median line caught the lower edge of it. But then from here, look what we have just done. Right to the median line yet again. Now I'm on a 15-minute chart. Here's the 1, 2, right? And we're tapping it here. So was this a good trade? Right? We know, as I've said to you many, many times, right? That's the best odds in trading. Well, shit, we're past the median line. I always tell you 80% probability of making the median line. Well, we opened beyond the median line. So then it becomes a question of, well, is this geometry going to hold it? Well, so that's where you kind of got to play around with, is it 1 or is it 2? Right? Are we using the start of 1, or are we using the swing at 2? They both seem to be influencing the market. But this, right, given that I'm tapping the median line as I hit, that gets my attention. Right? So as we know from trading principle number 2, pivots will often be made at or right or very close to the median line. So we tap the median line, then we start this little retrace. So it would appear that what I have here is just another 1, 2. Right? So, you might have been left hanging there if you were trying to buy the 50. They leave you hanging a little bit. So you get a front run, just strength of market. So where are we likely going next? Well, as I said, the tendency would be, if we're going to get a third, well, that would put us kind of in this range up here, or we could be over here going back to the median line. All right, so you've seen a daily, you've seen that thing totally deconstructed and then an Ellie account applied to it. And then you might say, all that money's been made. What about right now? What about today, this week of July 2018? Well, here's the 15-minute. Could you have made some money there? So what's the asset? Well, let's see if I can. I don't think, let's see if I draw this up. Will you be able to see it? Let's see. I draw that. So there you go. So that's Facebook, right? So certainly tradable, right? You guys, that's the point, right? It doesn't. The underlying asset does not matter. So don't get so caught up on being a crypto purist. If it's just a matter of not knowing how to trade it, we can help you with that, right? So oh God, if you can trade crypto, you can trade traditionals. They're infinitely easier to trade. So I just want to open your mind there. So why Why would you care what the underlying asset is? Other than it's kind of annoying to have to go open a new account where you've got your money already parked somewhere on a crypto exchange. Well, I just encourage you to open your mind there a little bit and maybe rethink that, because there is plenty of opportunity to be made, and then plenty of volatility and swings where you can trade. And certainly you've got other options with regards to how you trade this. Literally, you could be trading with options. So, if you've never traded options, well, that's another subject and something that we're heading towards in terms of our teaching curriculum. But it's even if you didn't know how to trade options, right? You don't have to. You can get a piece of this, right? So this is at $180, right? Now, sure, you want some leverage. That's where an option can be helpful to you. You might consider trading on a 2-to-1 margin. I mean, there's other ways to trade this where you can get the leverage that you're after. But, sometimes leverage can be a dangerous thing, particularly if you're moving to an asset class you're not familiar with. But with regards to the analysis, same thing every time. Doesn't matter. The chart trades the same way every time. So, open your mind, people. All right, that'll do it for now.